Hi, I'm Jason McIntosh, and welcome to part 3 of this online workshop. If you're looking for strategies to help you identify more opportunities, or you want to know when to buy, or how to maximize your gains, or how to minimize your risk, or when you should sell your trades, then, well, you're in the right place. This workshop is all about teaching you the skills to become a more confident and profitable trader. I want you to learn the same approach that some of the world's best traders use to make millions. You see, I've been teaching these strategies to people for years, and I know they made a real difference to many people's lives. It's allowed them to take control of their trading and given them a plan to trade with more confidence than ever before. So, this is the third video in this series, and I think you're going to love it. I'm going to cover 2 of the most important rules of all, but if you miss video 1 or 2, I highly recommend you stop right now and go and watch them. They're required viewing for anyone who wants to trade for themselves. I want you to get the full value from this workshop, so you should go watch those videos now. Don't worry, I'll still be here waiting for you. Okay, so you're going to remember that from the previous video began with rule 1, which was to always trade with the trend. You see, the trend is the path of least resistance, and the odds favour that it continues. I also told you about one of my favourite indicators, the moving average. This can help ensure you're on the right side of the big moves. A moving average is a go-to indicator for many of the best traders. You also learned about rule 2, which was to have many relatively small trades, not a few big ones. This is the single most important thing I can tell you. It's why the best traders focus more on what they could lose than what they could win. Their secret to success is ensuring they stay in the game. Now today, I'm going to tell you about rules 3 and 4. They're just as important, but they're also 2 of the hardest to action. Many people just can't bring themselves to follow them, and their careers, well, their trading careers simply come to an end. But the rewards for getting this right could be huge, and a bit later, I'll show you how much extra money you could potentially make by following these strategies. Now, before we start, I've got 2 warnings for you. The first is that the volume of information can seem pretty intense. There's a lot to get your head around, so please don't be intimidated by that. It's all about taking baby steps. It's all about the process, not perfection. I didn't get here overnight, and you don't need to either. The second warning is that I'm going to move through this fairly quickly. I'm not going to cover every detail. We've got a lot of ground to cover, and there simply isn't time to teach you everything in the time available. But by the end of this, you should have a solid blueprint for moving forward. Now, people sometimes ask me why I give this information away. They say, if it's so valuable, then why share it with anyone? And I understand that. I was once skeptical as well. I didn't understand why a good trader would share their secrets. I thought good traders would trade and only ordinary traders would teach. But you know what? I was wrong. I learned early in my career that the best traders were often the most generous with their time. I also learned that there were no secrets. The best traders were generally using the same strategies that their predecessors had been using for decades, if not centuries. I'm fortunate to have had some amazing mentors over the years. Learning from them has made a huge difference. It not only fast-tracked my career, it also put it on the right track. I'm forever grateful to those who taught me along the way. These people, they took their time to share their experiences, to pass on their strategies. My success is every bit a function of their earlier achievements. And by teaching you, by helping you learn what works and what doesn't, by helping you find great opportunities, and by telling you how to maximize those opportunities, I'm continuing to follow in my mentor's footsteps. And that's why I do this. Now, don't get me wrong, this business also generates a great income, and I love that. But the thing that gets me going each morning is spreading my impact. And that's why I'm so passionate about sharing my trading formula. And that's why I'm so excited about sharing this workshop with you. Because by now, you know there's a better way to trade. And you know that every successful trader starts as an aspiring trader. They then go out and find the right people to learn from. They find the people who've already become the trader that they want to be. And they learn from them. They make their processes and their strategies their own. You also know that hope and trading don't mix. And you know that approaching the market without a plan is a recipe for disaster. I can pretty much guarantee you that it's never ended well for anyone who just thought it was a case of buy low and sell high. There's no 2 ways about it. You can't depend on hope. You can't just buy a few stocks and hope they go up. If you're going to have success, then you need a strategy, a step-by-step formula, and that's why you're here today. Now, one of the things we're going to cover in this video is what I call the trader's safety net. You see, this trading approach is so powerful and it's got so many built-in fail-safes that you don't need to get every trade right. You can make mistakes as long as you follow the formula. As long as you get the core pieces right, then you can get things wrong. Personally, I've made tons of mistakes over the years, and I'm sure I'll get things wrong in the future. Every trader does. But with the trader's safety net, your mistakes shouldn't ruin your portfolio. If you approach each trade in the right way, you'll ensure that no single mistake takes you out of the game. Okay, so let's get started with rule 3. So let me get you thinking. Have a listen to this. A quitter never wins, and a winner never quits. That quote comes from Napoleon Hill, the original self-help guru. Now, I'm sure you'll agree. The truth of this phrase is, well, it's undeniable. It captures the essence of success and failure in just a few short words. The statement is, look, it's as timeless as it is simple. It's something I tell my kids all the time. But you know what? This mindset could ruin your prospects as a trader. You see, there are times when quitting is the best thing you can do. Your survival on the markets could literally hinge on your ability to give up when a trade isn't working. But for many, quitting is hard. I often see people doggedly holding onto their losing trades. Some even double down in the belief that their original view will eventually be right. But in this setting, refusing to quit can be a disaster. A complete disaster. I've seen many traders fail over the years due to an unwavering persistence. Their refusal to take a relatively small loss early has led to some career-ending losses. The best traders avoid this fate by using a stop loss. If you're not familiar with the term, a stop loss is a preset exit point. Think of it as a line in the sand, a point where you accept that a trade isn't working and you quit the position. Of all the trading rules I can tell you, this is one of the biggest. A stop loss strategy is, well, it's your backstop when things go wrong. In a moment, I'll show you the difference a stop loss strategy could make to your portfolio. You'll see why I believe quitting losing trades is vital to your success in the markets. But first, I have some examples of why quitting is so important. You're going to see 3 occasions that I gave up and I was a lot better off for it. Now, losses are an inconvenient truth for many people. They'll happily tell you about their triumphs, but their defeats, well, that's another matter entirely. Now, I disagree with this attitude to losses. You see, a loss is simply part of a trader's cost of doing business. And when done correctly, quitting a losing trade is, well, it's a victory in itself. Let me show you what I mean. This is a trade from my own portfolio. The stock's name is Bulletproof Group, a cloud servicing company. Now, my entry strategy is to buy as the share price is rising. This is because the odds favour a strong stock will stay strong. That's an underlying principle of trend following. But this won't always be the case. Some trends falter quickly. You see, strength isn't a guarantee of future gains, and that's okay. What's important is how you handle a trend reversal. My approach is to minimise a loss by quitting the trade. This helps ensure that a losing position doesn't become a big problem. An early exit is often the cheapest option. But many traders do the opposite. Instead of cutting losing trades, they persist. Sure, some stocks do recover, but the danger lies with those that don't. These are the stocks that can ruin your returns. The likes of Bulletproof can languish in a portfolio for years. But best traders rarely have this problem. You see, they sell when a stock hits their stop loss. This is the quitting point. It's how they avoid hanging onto a stock that spirals lower. Giving up on Bulletproof was the right call. I took an early loss of 21% and I moved on. It was only a relatively small cost to my portfolio. But those who didn't, well, they paid a big price. Bulletproof fell by a further 84% over the next year and a half. Not using a stop loss has been an expensive lesson for these people. Some portfolios may take years to recover. Here's another example. iSelect. Now, I'm going to say something that may surprise you. This was a good trade. Yes, the result was a loss of 24%, but the trade's underlying process was good. You see, I followed my trading plan and I quit at the right time. Holding and hoping for a rebound would have been, well, it would have been a truly bad outcome. iSelect lost a further 80% in the 8 months after my exit. Many people will say that the trading is all about the big winners. Sure, profits clearly play a role, but it's how you handle the losses that largely determines your success. A strategy for quitting when conditions change is a must for every trader. The final trade I want to show you is a company called Catapult Group. This was a successful trade. I walked away with a 61% profit, but it could have been very different. A mistake many traders make is to hold their winning trades too long. They ignore warning signs and they don't sell when they should, and this often sees them give back all of their profits. Catapult fell by 66% in the year after I quit my position. Had I stubbornly held, I would have been showing a loss of 45% instead of a big double-digit gain. Now, these are just 3 examples, but would a stop-loss strategy be as effective across an entire portfolio? Well, we don't need to guess. One of the great things about system trading is backtesting. This is where you use historical data to road test a strategy. The results are hypothetical, but they show you what's possible. So here's what I did. I put 2 strategies to the test. The first doesn't use a stop loss, while the second strategy does, just like in the examples you just saw. The starting capital for each simulation was $50,000. Here are the results of strategy 1. The simulation begins in 2003 and runs for over 15 years. It uses one of my system's entry strategies and has an initial trade size of $1,000. You could call this a buy and hold strategy. The system runs its winners and losers. A stock only leaves a portfolio in the event of a takeover or a delisting. Now, at first glance, this doesn't look too bad. The strategy turns $50,000 into $149,990 before costs and dividends. That sounds like a reasonable outcome. But there's a wide range of results. The best trade is a whopping gain of 2,005%. This was in an engineering and resource company called Monadel Forest Group. On the other side of the ledger were 18 stocks that fell by more than 80%. The huge win in Monadel Forest barely covers these losses. It shows that a string of disasters can overwhelm even the biggest profits. Putting losing trades in the bottom drawer isn't wise. The strategy's annual growth rate was 7.4%. By comparison, the All Ordinaries return was close to 6.9% per annum. A good buying method gives this strategy a slight edge, but there's no plan for when a stock goes into reverse. Several big losses, well, it really holds it back. Okay, so what difference do you think a stop loss strategy will make? Have a look at this. A plan to quit losing trades changes everything. From a starting base of $50,000, the account climbs to a closing balance of $252,732. That's $102,000 more profit than the simulation that doesn't use stop losses. And remember, this uses the same settings as before. The only difference is the exit strategy. If you're wondering, the initial stop loss is set at 25% below the entry price. The simulation then uses Motion Trader's exit plan to let profits run. You know, persistence can take you a long way in life. It's the force behind countless stories of success. Rewards often come to those who stick at their goals. But when it comes to the stock market, quitting pays. You see, unlike most professions, success as a trader hinges on your ability to quit. Many people find this hard to grasp, and it's one of the biggest reasons people fail to make money. But it doesn't have to be this way. A stop-loss strategy can help you avoid the losses that ruin many portfolios. That's how the best traders operate, and there's no reason at all why you can't do the same. So that's rule 3. Quit your losing trades early. Take a relatively small hit and move on. Just think of it like this. A trading loss is simply the cost of doing business, and a good trader will want to keep their costs as low as possible. This next section is going to be fun. I'm going to put you to the test. We're going to see how good you are at resisting temptation, and if you answer this correctly, you could be well on your way to lifting your game to the next level. Okay, so without further ado, let's get straight into rule 4. Right, so rule 3 was all about quitting. I tell you why it's so important to cut your losing trades relatively early, and you saw 3 examples from my own portfolio. Knowing when to quit has probably saved me millions of dollars over the years. It really is that important. Now rule 4 is the opposite of quitting. I don't want to spoil it by giving away too much now, but I will say this. While quitting has probably saved me millions, getting this next part right has been the key to making millions. The thing is, for most retail traders I meet, most of them get this wrong, and it holds them back enormously, and they simply don't make the profits that they potentially could. If they could do this one thing differently, then I think they could make a lot more money. So let's get into this with a question. Are you good at self-control? Can you say no to temptation, or do impulses often win the day? You know, self-control can be hard to master. In fact, many people rate it as their greatest weakness. But getting a handle on it could really change your life. You see, self-control is vital to success. It allows you to regulate your actions, and this helps you make good choices despite a powerful urge to do otherwise. In a moment, I'll show you how this single skill could transform your portfolio. You'll see how some of the best traders use self-control to make triple-figure gains. But first, I'm going to tell you about a fascinating study. It involves 2 things you don't usually link to trading: kids and marshmallows. The findings about this unlikely duo helps explain why some traders make a lot more money than others. Now, the research I'm referring to, it dates back to the 1960s. It was done at a preschool on the grounds of Stanford University. The aim was to measure self-control in kids. So how do you test kids' willpower? Well, you do it with a soft, gooey marshmallow, of course, and that's exactly what the researchers did. So each child was put alone into a room, and they had a marshmallow with them. They had one instruction: resist temptation for 15 minutes. If they could do that, the reward was a second marshmallow. Well, you can probably guess what happened. A few kids ate the marshmallow immediately. Others desperately tried to hold out. They put their hands over their eyes. They pulled at their hair. Some even patted the low like a pet. But for most, it was to no avail. Close to 70% gave in to temptation. And that's not where it ends. The lead researcher, Walter Mischel, he's been following this group ever since. His findings reveal a lot about the importance of self-control. You see, Mischel found that the longer a child resisted the marshmallow, the better their prospects later in life. And that's academically, financially, socially, physically, and emotionally. But just think about that for a moment. Success is largely due to our ability to resist impulses. It's about delaying something you want now for a potentially bigger payoff later. And this makes sense. Self-control affects what you eat, how much you spend, and how hard you work. It also has a big influence on the way people trade. Now ask yourself this: have you ever sold a stock for a quick 20% gain? I know I have. An early profit can be hard to turn down. But just like the marshmallow test, resisting temptation could lead to a better outcome. Let me show you what I mean. The stock you're about to see from my own portfolio is an example of how my trading system profits from big trends. Many of the most successful traders operate this way. Check this out. The chart you're looking at is for online travel business Webjet. Now, I bought a stake at $4.45 as the stock was breaking to a 26-month high. As I told you in video 2, probability favours that a strong stock will get stronger. And that's exactly what happened. My shares were up 20% within 6 weeks. I'm sure many traders would be eager to cash in their winnings. A quick fire gain can be hard to refuse. But here's the thing. I know that resisting the urge to sell is a key to bigger profits. This means turning my back on lots of modest gains. You can't win big if you're always taking a 20% profit. Here's what happened next. My shares in WebJet went on to double in value. This is a bit like the adult equivalent to getting the second marshmallow, and it all came down to one thing, delaying a reward. Now, this won't always happen. Some trades will deliver smaller profits and others will fail, but there's no doubt in my mind, controlling the urge to sell is the secret to big profits. You see, traders who settle for modest profits never get a WebJet. It simply isn't possible. That's because they sell their best stocks before the price really gets going. So when should you cash out a winning trade? Well, many of the best traders use what's called a trailing stop. The aim of this exit strategy is to maximize profits from the biggest trends. A trailing stop can also help control the urge to sell early. By having a calculated exit point, you may be less likely to sell your most promising trades on a whim. Have another look at this chart. Focus your attention on the red line below the share price. That's the trailing stop. Now, people sometimes tell me that a trailing stop is always late to sell. They'll point out that WebJet's peak was at $12.02, while my exit was 20% lower at $9.40. And that's okay. I believe it's better to sell a bit late than way too early. The reason I got a 111% gain is because I was able to resist an early profit. I bet that most of the traders who bought around the same time made a lot less money. Now, this is only one example. Would resisting modest profits be as effective across an entire portfolio? Well, I've done some backtesting to find out. So here's what I did. I backtested two variations of the system. Strategy 1, sells the trade rises by 20%, and strategy 2, lets profits run until the trailing stop triggers. Both strategies use a 25% stop loss for stocks that fall. To make the simulation more like a regular portfolio, I've set the starting capital at $50,000. The strategy invests 5% of capital in each trade, so this allows for a 20-stock portfolio. Lastly, there's no allowance for cost of dividends. So here's how the first strategy performs. Not a bad result. Selling winning trades for a 20% gain is a profitable strategy. Over this nearly 10-year period, the approach generates $60,727 in profits, or 8.8% annually. By comparison, the All Ordinary's annual return was 7.3%. Okay, now for the second strategy. What do you think will happen? Will resisting an early profit give a better outcome? Let's have a look. Letting your profits run makes a world of difference. The approach has an overall profit of $97,577. That's 60% more than the first strategy. The average annual return of 12.2% is also well ahead of the All Ordinaries. And remember, this is for a 20-stock portfolio with starting capital of $50,000. I don't see any reason why you couldn't get a similar performance from your own portfolio. The key is to resist the temptation of an early gain, just like I did with WebJet. Yes, I know this is easier said than done. That's why many of the best traders use a trailing stop to exit their stocks. This helps keep them in their best trades for longer. It's their secret to resisting the urge to sell. And if you can do this, then you open the door to stocks that could double, triple, or more. This is how many of the best traders make their millions. So next time the urge to take profit strikes, think like a kid. Ask yourself, could you get a second marshmallow if you wait? And if your answer is yes, then you'll know what to do. Now, the next video is the final installment in the series, and it's possibly the most important of all. You see, even if you get the first 4 steps right, you trade with the trend, you have many relatively small trades, you cut your losses early, and you resist the urge to take profits. Even if you do all that, if you miss the last step, I can almost guarantee you're not going to make the really big profits from the big trends. I mean, stocks that could double, treble, or more, the stocks that could really make your portfolios here. If you can get your head around this final concept, you could be well on your way. Now remember, you don't need to master all of this in a few days. It took me time to develop my skills, and thankfully I had a lot of help along the way. This made the whole process much smoother and quicker than using trial and error, and that's what I want to do for you. I want to help you in the same way my mentors helped me. But don't worry if it seems like a lot to take in. It's all about baby steps. It's about getting into action, and that's the key. If you're going to move forward, then action is essential. You need to start taking those baby steps. Now, I can tell you this, the formula I've been telling you about works. It's the same process some of the world's best traders use, and it's the approach I use myself. While the future could of course be different, the approach I've been telling you about has a long track record, and I fully expect it to continue delivering. You just have to follow it. Before I finish, I've got to tell you that sharing these videos with you has been an amazing experience. I've had so many people watch them and leave comments, and the responses have been, well, it's been overwhelming, and I've really enjoyed doing it. Now, don't get me wrong, I love the lifestyle, the freedom, and the income that the markets have given me, but it's the satisfaction I get from helping people succeed that really gives me the greatest sense of purpose. So if you're ready to join me, if you're ready to work towards the lifestyle, the freedom, and the income, I'm going to be opening registrations for my Motion Trader service in just a few days, and I'd absolutely love for you to join me. Now, this is how it works. I open up registration and I take in new members. I then close registrations and give members access to my weekly mentoring reports. You also get specific trade signals with step-by-step instructions. It's a bit like having a battle-hardened trader sitting by your side, just like I had early in my career. Now, my next video is going to be about moving forward, and I'll have lots of details about what a Motion Trader membership entails and how you can get started. And remember, I'll also be explaining the all-important final step of the formula, the part that brings it all together, so look out for that in the next video soon. But in the meantime, I'd love to hear more about your trading journey. What would learning the right strategies mean to you? Scroll down and leave me a comment, and maybe hit the like button. But importantly, leave a comment for me. I read every one of them, and I respond to many, and I'd really love to hear from you. So that's all for now. I'm Jason McIntosh, and I'll see you soon.